Hello and welcome to another episode of Building the Premier Accounting Firm. I'm your host, Roger Connect, president of Universal Accounting Center. For more than 20 years, I've been working with accounting professionals to help them start and build successful businesses offering quality accounting, bookkeeping, and tax services. It's here that we talk about the various things you need to be working on as it relates to your business, speaking to the experts, finding out what resonates as it revolves around things related to marketing, selling, tech stacks, staff training, offering quality accounting services, getting paid what you're worth, mental health, just a variety of topics that you can essentially dive into and work on within your business. Now, today I have a guest that I'm excited to have on the show, someone that I've been aware of for some time, and I'm excited to now actually have a conversation with Nolan Bradbury. He is the founder of Bradfield Accounting and a seasonal financial professional who is passionate about helping business owners achieve their dreams. Nolan leans on 2 decades of experience in both the public and private sectors to provide insightful, relevant, and most importantly, digestible financial guidance. He works to help entrepreneurs minimize the unknown and remove the operational uncertainties from the equation so that they can concentrate on what they do best, not lose sleep, and become more profitable. So Nolan, welcome to the show.
Thank you for having me. It's a pleasure to be here.
Yeah, this is going to be exciting. So first of all, where I like to begin is a little bit of a backstory. Just give us an idea of what got you into the accounting profession. Why become an accountant?
That's the question you ask every accountant. Why did you do this? So truth story is I went to college thinking I would be a psychology major. I was really fascinated in why people make the decisions they make, or in some cases don't make. And I say that because that kind of informs where I'm at now. So I'll come back to that in a minute. But I went to college, and then I found myself really attracted to accounting from the standpoint of it explained a lot of things. It was kind of a Rosetta Stone to the business world in my mind. It allowed me to sort of see all these different pieces. And so went down that path, graduated with an undergrad, got my master's in public accounting, a very sexy thing to obtain, let me tell you. And then went into public accounting. Worked at one of the large four at the time. I think there's still four at the time, and was on the audit side. Worked on some really large clients, but ultimately found that there was something lacking, that I wanted to be a bit closer to the people I was working for and helping. Went into private, did that for a little while, and took a company public. Really enjoyed that experience. Wow. That was really insightful and exciting. Ran SEC reporting, but ultimately I got to this point where I was like, I just want to help the people that are like hiring me. And when you work in big public accounting, even large private, you just don't get that exposure. So last 12, 13 years, I've been working directly with business owners to really help them improve their lives and do the thing that they want to do, which is have this business that helps them live the life that they want to live.
Perfect. Now, regarding that experience of taking a business public, I'm kind of interested. You said that stood out to you as being one of those milestones in your career. What was so interesting about it? What was one of the things that you really appreciated about the experience?
Yeah, growing up, when you're dealing with business, like you see sort of this like very sort of distant view of like, oh, there's stocks and this is how they get traded, and like you understand sort of the nuances of like when you work in public, that you're working on the audits and you're ultimately preparing the documents that people are theoretically using to make investment decisions off of. Then you flip it over and you see the other side, and you see how you get to that point. You see the way the narratives are put together, and you see how you go out to the road show and you're selling the company and you're finding investors and all the due diligence that goes into that process. It was just really fascinating to me. It was kind of like pulling back the curtains and kind of seeing how everything is done and made. And I enjoyed it. Like, it was fun. It was kind of, I wouldn't necessarily want to do it again and again, but I really enjoyed it at the time. As a younger man, it was a really entertaining and exciting experience.
Nice. Very good. Okay. Well, then you actually mentioned that you broke away, started your business. I'm very intrigued by the idea of entrepreneurship. I mean, you clearly could have gone to another position, taken on another role, moved to another company. Why start a business?
Yeah. So truthfully, I didn't start it myself. I was recruited by a friend of mine. He had started a business, and he pulled me in to help him scale that business and grow it. And so we were partners together in that. And we're partners for the last 10, 11 years. And it was more recently in the last couple of years that I broke off and have been focused sort of in my own thing. That's where Bradfield sort of came into its origin story. But doing kind of similar work, which is really focusing on, I'll say, the non-tax side of things specifically. So the accounting, the reporting, with business owners, and helping them get a better relationship with their accounting. That's kind of been the enjoyment that I found in all that.
Interesting. So tell me about the co-founder relationship. I realized that you were involved with someone else. What was it like starting a business with someone else?
Well, having done both at this point, I can tell you that
Uh-huh.
it is enjoyable to have someone there with you along the way. Like it is. If you ever start a business, it can feel very lonely at times, and it can feel like you're the only one because you are the only one. But having someone there, especially someone who was a friend for as long as we've been, going through that process with somebody else, being able to bounce ideas off of each other, having someone else who was a good yin to the yang in terms of how that works, right? And sort of like providing just a very good dialogue around like, how do we do this, and what do we want to do, and what do we want to focus. I think it helps manage some of the gray areas in a much better way, because you do have this sense of it's not just me and my own myopic view of things, right?
Mhm.
Like there's this risk when you're the only one making decisions that your opinion is the only thing that's influencing it. Like it's very easy to get caught up in that. And I think having someone there along with you for the ride is really nice in that sense.
I like that. I appreciate you bringing out the yin and yang kind of a component. We
Yeah.
all have our strengths, and it's
Yep.
nice to have somebody else that you can tag team with, and hopefully they can complement the strengths we have, and at the same
Exactly.
time we can complement theirs, and then there's a great synergy. So that's a great way of looking at it. Now, you indicated that you're now offering accounting services. So there are a few things I want to dive into here
Yep.
because I know a lot of my listeners are clearly, as accounting professionals, doing a similar work. So I'm sure there's things that you're experiencing that they can either relate to or learn from. So how do you explain what is why it's critical for the relationship for the client and the accountant to be strong, to be something that they actually have rather than just numbers and having this commodity type relationship of I've done the work? Why the relationship?
Yeah. So, I led up front, right, that I was originally thinking I was going to be a psychology major. And I'm going to
Yeah.
bring that back into the fore here, because I think this
Okay.
very much informs how I sort of view this relationship, right? Which is there are two types of relationships, if you will, when we do the work we do. There is a transactional one, and then there's the one that extends beyond that. And I think that there's always a risk. It always usually starts from a transactional standpoint, but it stays if you can move past that point. And so to move past the transactional point, you have to connect with the person on a level that is beyond just the accounting. Like you have to understand them. They have to understand you. For a relationship to be an actual relationship, you have to have more than one person show up and want it to be a relationship.
Hmm.
And so I think that sometimes gets lost, is that like one side can want that, but if the other doesn't, it won't ever happen, right? And so one, I think it's important to understand, what is the client actually looking for. Sometimes all they want is a transactional situation, and that's okay, right? As long as you're okay with that.
Mhm.
But if they're looking for more than that, then I think you have to engage with them and find, what I always like to start with is, what is the pain point? Ironically enough, when I talk to someone for the first time, the question I always start with is, why are you here? I know you don't want to talk about accounting. It's not your favorite thing. I mean, like, I'm not naive to that aspect, right? But so what is it that's causing you to take time out of your day to talk with me about something that's probably not your most favorite thing? And when I do that and we start with that point, I think it really humanizes the whole process, and it allows the person to get past the frustrations, the insecurities that they may have around finance and that, and it gets to the crux of the problem. And when you do that, then you can actually have a positive sort of conversation around it.
You know, you're hitting on a number of things that are really, really valuable and important, things that resonate with me. I like the human side of this. You brought in the psychology of it all. And I like the fact that the relationship, how you described it, is a two-way thing. There's something that is commitment. You know, are we both committed to making this work? I've got to get information from you. You've got to cooperate. And at the same time, I've got to deliver something that's relevant. So there's this collaborative relationship, but I can only be in as much as the other person is perhaps in to get gain out of this. If I'm all in and they're not, it just feels like I'm talking to a wall. I'm doing all this work and it's not useful. It's not appreciated. It's not valued. They don't accept it. So there's a lot of things here going on that I think you alluded to. So one of the things I want to dive into then is, what are some of the common factors that prevent business owners then from achieving their goals as it relates to accounting and us helping them in their business? Because there's a lot of things that they need to overcome, but there are things that perhaps get in their ways, and maybe that psychology that you were referring to earlier will play into this.
Yeah, absolutely. And you touched on something that I really is near and dear to my heart, which is, you cannot care more than the client about their situation. I know that
Amen.
that sounds cold hearted if you listen to it just on a surface, but the reality is, like, you just can't. Like, someone has to care. The person who cares most about you has to be you. And so in any relationship, if you find yourself in the situation where, like, you're pulling more than you feel is appropriate, you're out of alignment. And that really, what that means is, you're either not being respectful to them and or yourself. And that ultimately is going to undermine any relationship. And that's true not just from a professional standpoint, that's true in your personal life, with your spouse, with your kids, any situation where that exists, that's a component of a relationship. Now, to answer the question, like, what are the things that hold people back? I jokingly said that I know people don't want to talk about accounting, but there's an element of truth to this. There are studies that say the thing that business owners like the least about running their business is the accounting and finance element of it. And so if you understand that, what you also then understand is that humans avoid things we don't like. And so if you do a quick formula, I am an accountant after all, you can sort of substitute in that and go, well, if people don't like accounting and we avoid things we don't like, then they're avoiding accounting. All right. But what they also do understand is that it is an important part of their business. They just don't want to deal with it. So where does that lead us to? We have to get to the crux of why do they feel that way? And there's a variety of reasons that could be. Sometimes it's a combination thereof, but usually it's they've been burned in the past. They had a bad relationship. Either the person didn't give them good information, or it was wrong. The information they're getting isn't timely, and so it's meaningless to them. Or the one that I think is often probably is weaved through the most of all of these situations is, I'll be honest, us as accountants, we don't do a great job of talking in non-accounting language. And so when we engage with our clients, we talk to them as though they're another accountant, but the reality is they're not. And so we have to be better about meeting them at their level. Like if you talk to someone in Latin and they don't understand Latin, it shouldn't be a shock to you that they're not reciprocating a conversation back to you because they have no context of what you're talking about, right? So when you get to the crux of these, then you can really start to understand like where their pain point is and solve the specific thing. Otherwise, you're solving symptoms, not the disease.
Boy, you're hitting on a number of things that really resonate with me. And for my listeners, I'm sure you've heard a lot of these things before. The first thing, the idea of being a translator, let's just start there. I completely agree with you. We use this cliche to say that accounting's the language of business, but what role are we playing in the communication of that information from the company? The company is speaking in accounting to the business owner who may not know that language. And so we have to be that translator, that interpreter. We have to draw out of that information the relevant things that they need to be aware of that's really part of the conversation. And how critical are we in that that whole transaction? And it's very critical. The essence of the communication is hinging on how well we're able to make the information relevant. The second thing that I wanted to bring up is the fact that at the very beginning you talked about caring. Yeah. There's a phrase I use that says they, the customer, won't care more than you care. Meaning, if you come to it indifferent to the information, it's just they're just numbers. Here's your financials. They're never going to get excited about it. They're never going to care more than you are, or get more excited about the information than you do. Now, it matters to them, but they don't understand how it's relevant. And so we have to get excited about this information and draw attention to things that really stand out. We have a perspective that they don't have. We're outside of the day-to-day operations. We're seeing things that maybe trending that we need to be able to point out. So these are things that I think, from an emotional point of view, we need to bring to the conversation with some energy. But then the last thing that I wanted to kind of delve into is this idea of what you brought up about the information being relevant and applicable. Yeah, oftentimes they're not excited. They see accounting as a debt or a debit rather than an asset. Or I'm not saying that right.
I know what you mean.
Yeah, what they're doing is they see it as a necessary evil. That's the phrase I
Yes.
want to use. They see it as a necessary evil to be in business rather than an essential thing, an asset to their success. That if I lean into the accounting, maybe I can find ways to be more profitable, more successful. So the phrase I was looking for there is this necessary evil. Yeah, I'm going to do it, but I'm going to do it only when I have to and as much as I need to, period. And what we need to do is show that we can actually be a critical part to their success. And when they find out that we're nice and that we're communicative and that we're helpful and that we have good insights, they start to go, wow, this is a good relationship. It's helpful. It's beneficial. It's helping me. And all of a sudden their tune changes to where, you know what, maybe I'm not going to talk to them just once a year. Maybe I'm going to talk once a quarter. Hey, how about once a month? Let's have some conversations about the numbers. And I'm curious, as a business owner, I'm now going to ask you as an accounting professional, what are you seeing here? What am I missing? What should I be paying attention to? Because they all of a sudden realize you care and you're interested. So anyways, a lot of great things here. So I want to go now to the fact that business owners often overlook a lot of things. And when they're beginning their business, they may be trying to scale it or go to the next level, but they don't understand how accounting can play into that. When you're working with your clients, how do you get involved with the growth of the business?
Yeah, great question. So if there's a principle, it's called a rule, but it's really more a principle. It's the rule of 3 and 10. And this is one of the things I always try to sort of walk through clients with, is the understanding of this idea. Because to me, it's the thing that they don't get that often holds them back. And once we can let them see that, it solves a lot of constraints for them.
Okay.
The idea is that as you scale from 1 to 3, 3 to 10, 10 to 30, 30 to 100, and so on, and that can be in revenue increments, it can be in people, it can be really in anything, that the thing that got you to that last sort of level is the thing that's going to hold you back from reaching the next level. So what I mean by that is, if you're a $300,000 a year revenue company and you're trying to scale to $1 million, what you hear a lot from people is they'll get to like 600, 700,000 and they start to plateau. Like there's this resistance of pushing through to that next level, and they don't know why. And it's not that it's simple or easy, but when you, as an outsider, you have this benefit of looking in and go, well, part of the reason is your company is behaving like a $600,000 or $700,000 company. If you can't be $1 million company and behave not like at least $1 million company. And so that's true across all elements of the business, but it's particularly true about the accounting. How are you going to get the information you need in relevant, digestible ways to make the right strategic decisions if you're still using Excel to come up with your financial statements? How are you going to be strategic from a tax perspective if you don't have good data to base the strategies off of? Like, you have to up level what you're doing in order to get to that next level. And so it isn't that you have to immediately go from 0 to 10 on everything. It's that you do have to incrementally increase, though. And that could be through up leveling your systems, your technologies, the people you have in place. And so when we come in and we talk to businesses, and most of them are looking to grow and scale, we have to assess, like, where are you getting held back in this? And not just from an accounting perspective, but how accounting seeps into all the other areas of the business, operations, HR, things of that nature. They're all intertwined, believe it or not. And how do we help you move past that so that the friction points start to lessen and that you can actually get to the next piece? Because people don't necessarily have a problem spending the money to grow, but if they're not spending it on the right resources, then it's not going to ever get them there.
Having experienced some of those growth pains, I know exactly what you're talking about. There are these friction moments within the business that in order for you to go to that next level, things have to change. Things cannot operate as they are in that next phase. And so you have to change, and that change can be very difficult. But from an accounting perspective, we can actually help identify where some of those pains are coming from, where that friction, as you mentioned, exists. And we can actually help them kind of lubricate that to free them to go to the next level. So I like how you're describing it. Now, one of the things that I do want to kind of dive into is, clearly this is beyond bookkeeping. This is even beyond accounting. I would dare say it's moving into that phase where a lot of people now speak of advisory and CFO type services. Do you consider what you're doing advisory work?
Yeah, I mean, yes, I do, on a simple level. I think we do bookkeeping largely because we found an inefficiency in that we would run into these clients where part of the issue upstream was that we were getting kind of garbage in, garbage out. I mean, not to sound crass about it, right? But it's like they would ask for our help in these areas, and we could design the systems and the reporting and the infrastructure and the management team and all those meetings and that. But when you got there, the data was still not useful. And so we had to go back up a level and go, well, how do we fix that problem? So we offer the bookkeeping largely to be able to better efficiently offer the advisory. Because here's the thing, this is true whether it's accounting or tax, and this is what I've come to understand a lot better as I've aged, is that when people come to you to hire you for bookkeeping or tax, they're not actually hiring you for bookkeeping or tax. That's what they tell you because that's the language and the words they understand. What they're actually looking for is the strategy that comes from those things. Now, the problem is oftentimes they aren't able to explicitly tell us that. And so as people, we want to help them and we want to solve the specific thing they tell us. But this is where being a translator is really important. You have to understand that they may not be telling you the right thing, and you have to get to the crux of the right thing to solve the right problem, right? You could be solving symptoms, not diseases, as I said up front. And so I think in this element, you have this situation where if you're not getting to that right place, then nothing is ever going to progress. And you'll have this experience where the client's like, well, I like this person, but they're just not giving me A, B, and C. I am sadly hear this a lot, right? And it's like, yeah, the person doing the work, they're good. They're doing a good job. It's just that the expectations you came in with are not in alignment with what they understood the expectations to be. And so through no one's intentional fault, it's never going to succeed. There's going to be this disconnect in the relationship because someone is thinking, well, I asked for A, but you're giving me B, and I really want A. And I hear all the time, right? I'm sure you have as well, which is someone's like, well, I like the baseline is that you can accurately prepare my tax return or my books, right? That's not what I hired you for. I hired you to do the things downstream that are really the things I want. And I think that's the piece that we sometimes tend to overlook.
So what you're describing here is something I'm quite passionate about, because having done business advisory for a number of years, working as a business coach, I've experienced this both from the client perspective, seeing what they're going through, and the accounting profession as they're communicating. The first thing I'd like to point out is, like you said at the beginning of this, it's the vocabulary, the language that we're using. They're coming asking for bookkeeping and accounting, and they actually have something else in mind, but that's the only word they know to use because you're an accounting professional. Therefore, they ask for bookkeeping and accounting. And the challenge becomes that we, as accounting professionals, revert back and go, yeah, we can do bookkeeping and accounting, but we're never defining what's really expected from that exercise. What do they really expect when they pay for bookkeeping services? Likewise, what are they expecting when they pay for accounting services? And tax would be a great example of this. When it relates to tax preparation, you might, as a business consumer, the business owner, presume that when I'm paying for tax returns to be prepared, that it's not just that they're being filed accurately and timely, but hopefully as a tax preparer, you're giving me some suggestions on tax mitigation strategies. But that's not the case. You didn't pay for
It
that.
is not right. Like, yeah.
Tax planning
Yeah.
and tax strategy is totally different than tax preparation. But as a business owner, I came to you and you're filing my return. Why didn't you tell me to do this strategy or do this thing to mitigate some tax liability? And at the end of the day, there's this confusion and frustration that the business owner has after a year or two or three, realizing you were just doing the taxes. You had no intention of helping me mitigate my tax liability. No, you paid me to do the filing and I filed them. Well, the same thing exists in accounting. When we're giving them the financials as it relates to bookkeeping services, too often they're thinking, well, if there's something there that I should know, you're going to tell me, right? And so you gave me the financials, the P&L, the balance sheet, and I'm assuming you're doing accounting. You're not doing accounting. You're not reviewing these. You're not doing anything as it relates to looking at the trends and looking at margins and assessing what's going on with last month to the previous month, last quarter to the previous quarter. You're not taking any time to analyze the reports nor give feedback. Even if you're doing the bookkeeping and see these things, you weren't paid to provide those insights. Therefore, you don't. But the business owner is just assuming that I'm paying for the bookkeeping and you'll eventually provide that insight. That's where the disconnect is. They think the accountant is a CFO. They think a bookkeeper is an accountant. And as a profession, we're too flippant about the use of those terms as to what we're basically providing and what they're paying for and what that really means. And the management of the expectations is totally off. How do you feel about all of that?
Roger, you're speaking my love language. I can't say it any like I 100% agree with like everything you just said. The terminology is dangerous in my opinion.
Mhm.
Like it's really easy to call something bookkeeping or accounting. Like, what does accounting even mean? Quite honestly, like I could call myself an accountant. It could mean like 8 different things. And you're 100% right. Like the tax scenario is probably the most black and white example of this,
Mhm.
right? Which is
Mhm.
where I was talking. My wife is actually a CPA, and we were talking about this last night. This is really nerdy accounting talk at home, but I was talking about how it's amazing. It's not amazing, but it's like I continue to sort of have to remind people that when you hire someone to prepare your taxes, that is literally what they are doing. They are fulfilling what you told. It's just that both sides don't understand that's not actually what they wanted, right? To your
Mhm.
point, to do tax planning and tax strategy, it's not being done while the return is being prepared. Like all that stuff has to happen almost a year before you get to that point. Um, One of the things I level set with people is like your tax return. I hate to tell you this, like it's not magical. It's a reconciliation. It's a really
Mhm.
big reconciliation at the end of the day. And all the things that you want done and things implemented, that all has to happen well before we ever get to opening up this return for you. And so to do that, you have to be thinking a year in advance. But the problem is in most cases, accounting or bookkeeping and tax preparation are always looking in arrears. They're always in a prior period or a prior year. And that makes it really hard. I'm not making excuses for us as an industry, but it makes it really hard when you're detail focused or compliant focused to pull yourself up out of the weeds and look at the strategic component at it all at the same time. It just is a really hard ask.
Yeah, one of the things that I focus on, and it's because of how we're both in that advisory coach space, and it's the question of therefore what? okay, we've got all this information.
Yeah.
How does this matter? How is it relevant? What are we going to do because of it? Now that we're aware of this, what are we going to do differently? And so those questions are very, very important when we're working with a business owner, because it's going beyond just providing the financial reports. And I'm going to circle back to the fact that as an advisor, you found that garbage in, garbage out. That's the exact same thing I'm experiencing with the business clients that I have. When I go in to coach them on their business, the first thing I'm asking for, or one of the first things within the initial months, is the financial reports. And without fail, I hate to say this, without fail, 100% of the time, the financials are garbage. I have got clients that literally over a year it takes to actually work through probably not just the one, but probably a second or a third accounting professional to get the books in order. It's ridiculous what I see out there as an accounting profession, what they're doing for the businesses. The fact that they can actually have one line in the chart of account that shows revenue is ridiculous to me. I want to know the correlation between the revenue and the associated COGS. I want to be able to actually go deep into what's happening within the organization to find product line profit margins. And all these things aren't possible when the accountant, or better said, the bookkeeper in this case, is simplistically providing the financial reports. Yes, they're accurate. That's the revenue and that's the gross profit. I get the fact that these are the numbers, but there's so much of a story that's in this information that's being hidden because we're not diving deep enough. And at the bookkeeping level, we just need to actually get the sub accounts created. We need to actually do the correlations. This is where the devil is in the details. And if we can get into that, that's where it gets fun and sexy. That's the exciting part. How do you feel about it?
100% agree. Like it is, and I do understand that early on, like if your business is very simple, right? Like you may not need that level of complexity. But again, going back to that rule of 3 and 10, as you scale, right? Like
yes,
you got to up level. Like if you're a $10 million business, I really hope you have more than a handful of lines on the P&L. Now, I hope you don't have 200 lines on the P&L, just to be clear, right? It can go too far the other way. But, to do the actual analysis, to provide the real insight in all this, you have to have data. One of the things that I try to explain to clients is, listen, intuition will only get you so far in running this business. At some point, we have to have data that will help us make strategic decisions. Now, I also tell them I'm okay if we get to that point and I give you the information, I say the information is telling us this, and you choose to do something else. I am okay with that. It is your business at the end of the day. But I need to make sure you're making a conscious decision, not an unconscious one. I cannot have you picking B, not knowing that A is the answer. If you want to pick B and you know that A is the answer, that's okay, because you understand your business in a way that I may not. You understand your clients, you understand the industry. That's okay. I'm not going to come in and act as though I'm arrogant enough to think I understand this better than you. But you can't have the scenario where you don't understand that the data isn't there to tell you that you don't know the right answer. That's the real problem that I think a lot of people experience. And as they're scaling, they don't realize that at some point you're over that crest of the hill and now you're using bad data to make bad decisions.
Yeah, I'm going to touch on one of the things that you just shared a moment ago, because I agree. It is not the role of the business coach or advisor to tell the client what to be doing. It's a matter of they have all the information. They know what needs to happen. We're supposed to be asking the right questions to draw out what they need to be focused on, because the conversation that we're having with them is perhaps the only conversation about this topic that's taking place. Management's not asking that of the owner. The employees aren't asking it of the owner. The customers aren't asking of the owner. The investors aren't asking of the owner. We as accounting professionals are going to have a conversation about the financials different than anyone else is having. And because we're having that conversation, they're going to have questions asked of them where they're going to have to pause and go, oh, okay, that's something that I need to consider. But at the end of the day, it's the relationship of our asking the questions that causes them to then find these epiphanies that they need to then address or implement in their business. We don't have the answers. They do.
Right. Yeah. And I do want to, if I can interject something here real quickly, because I can probably hear people screaming this in the podcast verse out there, that like, I understand that on some level, it isn't always the accountant's fault. Okay. Like I do understand that there are situations, right, where I have taken over clients where I look at the books in a vacuum and go, man, these are a mess. And then you get into it and you understand, oh, they're a mess because the ultimate keeper of this, the owner, doesn't actually care about them, and that you
cooperate
or cooperate. That's probably a better way of describing it, right? Like you're pulling teeth at some point, like it feels like that. And that is a real challenge that we face in this thing. And that's where I think it's really important to go back to, which is you can't care more than them. Okay. Like if you're in that situation, right, where you're like, I need to do this, like the reality is I don't mean this, like, this probably sounds wrong, but you have a bad client. Like, you have a client that isn't someone who you should be serving because they're not showing up in a respectful way and treating your business with the respect that it deserves. And the unfortunate thing is that will bleed into your ability to be respectful to the rest of your clients. It's the 80-20 rule, right? Like, there are this percentage of our clients who take up way more than our time than we should, and we allow them to, and that's not appropriate for both for us, for them, and everyone else involved. And so I don't want to ignore that component in all of this, right? That like that it's only us as accountants who need to do better. No, I know that there are other people involved in this process, but I would also say that like it's our job when we see that to go, no, we're not doing this. Like,
Yeah.
right, you have to be the adult in the conversation sometimes.
I appreciate you pointing that out, and perhaps that's something that I've neglected to say on occasion, is it is a two-way street. When the financials are poorly, let's say, created, I don't want to imply that it's only the account that's responsible for this, because clearly the business is playing a part. If they're not providing the information, responding back with answers to questions, there's a lot of information that the bookkeeper, let's say at that level, is amiss. They're not involved in the day-to-day actions or activity of the business. They're not familiar with the intimacies of what's happening in the organization, and so there are some things that it's better to keep it generic than try and be too specific. So
Yep.
yeah, no, very, very fair. And I appreciate that point that you're pointing that out. Now, the one thing I wanted to kind of move into, since we've acknowledged that both of us are in the advisory space, is what are some of the effective leverages financial reports can actually help or provide so that we can help business owners be more effective and more efficient in what they're doing in their business?
Yeah, so I think at a high level, you probably agree with me this, right? Like, every company has a finite amount of resources, and those resources are primarily capital,
Mhm.
both in time and money, right? That's their big components of this. And so what we have to help them understand is what is the best use of that resource, your time, your money, the combination thereof. And the reality is that as we give better information and I'll say that we pull them out of reviewing financial statements and teach them to use KPIs and metrics as the indicators that they should be, that then what you create is an environment where the upper level of management comes into meetings and can ask good questions like, what does this mean? Why is this number down? Like, that's actually their job. Their job is not to solve that for you, right? Believe it or not. Like, their
Mhm.
job is to identify the things that they are concerned with or that they want to make sure are working. And then that those things are assigned to people on the team, whether the outsourced accountant or someone internally, to resolve those questions. But that can only happen if the data is being set up and presented in a way that it can do that. And the key in all of this, right, is that how do you know which product you should be forcing the most on? It is always surprising to me how often you'll come in and you ask someone like, okay, what are your products? Talk me through them. Like, well, product A is the thing that we do the best on. It's our biggest seller. We put all of our resources to it. I'm like, well, what is this over here? Oh, product B, we just offer it because some people ask for it. And then you get into it and you get to better information. You start looking, product B is way more profitable than product A, and it's probably more scalable. Like, did you know that? And they're like, no. And it's because the data was never in existence to be able to like tell them one way or the other, right? And so having that information like in a comparable way, right? Not just absolute numbers that are in vacuums, but rather things that show us trends and things that give us comparison points and things that are KPIs, red flags to what is or is not happening. That's where you want to be able to get people. We do need to get them out of like financial statements are really for tax returns, if I'm being honest, and like investors to see at high levels. Like, they're not really the things that business owners should be using to guide and drive their business. Like, it is a lot, it can be a lot of white noise and things can be missed. Like, I much more am a proponent of like, let's find the 5 things that are most relevant to your business in these areas. Let's focus on those. Let's really refine them. Let's make sure the underlying operations are giving us that information. You're going to find much better success in that realm.
Oh, you're speaking my language right now. This is beautiful. So yes, yes, and yes. One of the things that we're really focused on is key indicators, key metrics that we need to be watching. So those KPIs are things that I really focus on with the clients, because honestly, the financials are so far removed from the success of the business. They're the last thing, the lagging indicator of whether or not this was all working, that you've got to run to the front of the experience and say, okay, what are the key indicators that we need to be watching that are going to determine the success at the end of the day? And those key indicators, the fun part about it is they may not be accounting numbers per se, but they are numbers. They're quantifiable. And we get to get involved in tracking those to say, well, what's the start of this whole journey as it relates to the customer and so forth? Let's begin there and figure out, okay, what's the cause and effect of, if we got a lot of these, what's the closing rate, what's the conversion rate, what are all these things going on? And you can go to the production level and say, well, if we're trying to produce this, if we became more efficient, can produce not just 5 of these in an hour, could we produce 6 in an hour? What would that do to our margins? All of these things are numerical things that you'll never find on the financials. None of this exists on the financials. Yet at the accounting level, it's these conversations that we can have that fit into our box. It's something that the business owner is willing to talk with us about because they're numbers oriented. And because they can now quantifiably track them, they're willing to track them. And now you can dashboard them. And with the dashboards, you can have key metrics that people are responsible for. And you can have standards. This is what the rolling 4-week average is. And are we performing to that standard? Are we above or behind or ahead or behind on the pro forma? All these things are fun things to get into, all of which aren't even financially related, right?
Yeah. And, I 100% agree with that. It's so spot on. Like I had a recent conversation with a client where I'm acting as a bit of a fractional CFO for them. And one of the things we were working on was working through like, what is the right metrics? What are we looking at? And I asked them, because the question came up, basically, they were like, well, we're trying to make this decision on whether or not we do this, but it's going to be driven by how much revenue we have. And so we kind of need to know, like, when do we turn the faucet back on if we need to do that? And I was like, okay, well, how long does it take to get people through the faucet so that it's coming out? And they're like, well, I don't really know. And I was like, well, that seems like a problem if you don't know when to turn the faucet on to have it come out. Like you could turn it on too early and like overwhelm the operations, or you turn
waste
on too
money.
Late. Yeah. Or you turn on too late and suddenly you've got people sitting around and there's no work to do and you're behind on this. And so you're right. Like it doesn't have to be a financial piece. But it's helping owners and businesses understand the relationships between how these numbers work, what they tell us, to help guide them in the proper decision making, right? Like that, having that information for that company help them make a better choice as to when we start to invest some of these money in these places. Otherwise, they would have possibly burned through the money too early.
Now, the thing that I would actually say about this is the fact that I believe that you just walked into that fractional CFO realm that you just spoke of. That's the CFO responsibility. It's the business model. It's looking at what's going on as it relates to the whole cog. And what we're trying to do here is basically look at cash flow. We're looking at workflow. We're looking at all these things that essentially make up the business to determine whether or not it's going to be profitable. If everything ran as it should, as we've designed it, is it going to make money at the end of the day? Do we actually see us working in this machine and producing what we hoped would come out at the end? And that's at the CFO level. That's not the bookkeeper level. That's not the accountant level. It's the CFO level. And it's not the advisor level either. It's the CFO level. It's cash flow. This is a great conversation. Nolan, I'm really appreciating your insights and the perspective that you've got. I'm going to do a few things here. One, I'm going to break away and kind of summarize this and come back for a final thought. But before we do that, for my audio listeners, you don't see this. For my video listeners, you'd see this. And in your screen behind you, you have stills, artwork that are on your wall, and they're too small for me to tell. It looks like one of them's like a Ghostbuster kind of looking image.
Yes.
All right. So are these ones that you've done yourself? Are these actual purchased ones that you've acquired that are from the actual cartoons? Tell me what they are.
Yeah, so I not to date myself, I'm a child of the 80s. And so these are all there's one behind me as well. These are all movies from the 80s. And so these are kind of like, they're faceless, actually, characters that are hand-drawn. I have not done these. If I did that, I would not be doing accounting. This is a whole nother skill set. But so that's got the year of the movie. So you've got like Back to the Future, Ferris Bueller's Day Off, Princess Bride, Ghostbusters, and then like Goonies, and there's some other ones off to the side. It's just sort of like, it's who I am, and I like to show up as an authentic version of me, and I love those things. And so they act behind me as a bit of a conversation piece for people.
So I presume that they're the same artist.
They are the same artist. Yes. They've done all of them. There's a whole bunch of other ones that they do, not just the 80s and that. You can find them on Etsy if you're curious. That's where I found them at. But
very good. No,
it's great.
I like them. My daughter is very much into Disney, so I've seen similar things as it relates to cartoons. It's essentially from the storyboarding that they're doing. And so I like that. No, they're very nice. So Thank you for sharing that little tidbit. All right, so here's my summary of this, and then I'm going to come back to you for a closing thought. And before I begin the summary, I do have an offer here. Universal Accounting Center that sponsors this podcast has actually for you something that you'd want to take advantage of. Universal Accounting has 2 books that you need to have in your hand and read as it relates to the conversation that we've had today. The first and foremost is that called Your Strategic Accountant. I wrote this book to actually address the things that we were discussing earlier as to the miscommunication that exists between business owner and accounting professional, what it is that they're paying for, and what are the services being provided. We need to be much more clear in our communications and setting and managing the expectations of our clients for the services that they pay. The second thing is a book called In the Black. It's 9 Principles to Make Your Business Profitable. Much of what we've talked about today is also addressed in that book, and I'd highly recommend it as it covers the 9 principles that you need to be profitable in your business. So take a moment, go to the episode description. There you'll find information regarding both Your Strategic Accountant and In the Black, 2 free books that you need to have as part of your library for your own business and that of your clients. The second thing I'd like to do is point out Nolan. He's got here his website. Obviously, if you'd like, you can go check him out, maybe reach out to him. But the thing I'd like to summarize from our conversation is a few things at the very beginning of the discussion. The psychology as it relates to accounting, the fact that this is a people business, the fact that we need to put a human side to this whole thing and communicate effectively with our clients. The other thing that I really thought was very powerful is the fact that for our clients, communication is a very big key part of our relationship. And when we see ourselves as that translator, that interpreter, we can communicate effectively, and it'll take them from that aversion to accounting because it's something that they see perhaps as, that necessary evil, as I mentioned, to be in business, to now embracing it and saying, okay, I need this information. What I'm having from this interaction with my accountant is helping me more intelligently and deliberately run my business profitably. And that's one of the things that I hope that they can say from each of the relationships that they have with us. The other thing is we got into the idea of saying that the numbers are essential for that of actually getting into the accounting and advisory space. We need good numbers. And from that, we can dive deeper and deeper and show the business owners how relevant they are. But at the end of the day, it's not just the financial reports. That's the end all, be all, end all. We need to start much further downstream or upstream as it relates to the experience. We need to go upstream as to what's actually those key performance indicators, the key metrics that determine the success of the business, specifically the leading indicators of that business model, and understand what it is that business does and where we can find those profits. Nolan pointed out, for example, having a client that actually sells a lot in one product, but diving deep and finding out that product B was the one that was more profitable, and in fact, one that could be scaled a lot easier. Perfect example to illustrate this. The other thing that I appreciated from this conversation is the fact that Nolan clearly has a passion for what we're doing. I love the passion that can be found in the accounting profession because we do make a difference for the clients that we work with. So, Nolan, all that being said, what's your final thought for today?
Yeah, so you did a great job of summarizing that. The thing I would just sort of like to bring back into this is, something you said, which is it's really important to know how you show up in the relationship with your client, and understand that if you want it to be a relationship, you have to treat it like a relationship, which means that you come into it with a genuine curiosity for understanding where they're at, what they're trying to solve, getting to the crux of those, and not just necessarily taking their surface answer as the answer, but confirming that like what they're telling you is where you need to be focusing your time and energy. If you do that, you're going to find that expectations are way more in alignment. You're going to have a better relationship. You're going to solve better problems. You're not going to waste your time, truthfully, in areas that they don't want you to be spending their time in. You're going to find that just all in all, you're going to have an actual relationship with a client that can grow and expand. And to your point, it's about how we show up. It's about showing genuine interest. And it's about asking the right questions and really listening to what you're being told to make sure that you understand it as best you can.
Beautiful, beautiful. Well said. Well, Nolan, this has been a pleasure. I really appreciate it. Let me wrap things up for my listeners first and foremost by saying, if you haven't already subscribed to the podcast, please do so. We'd love to have you subscribe and actually set your notifications so that each and every week you can get notified as to when we have a new expert on to share their insights as it relates to building the premier accounting firm in your area. Now, with regards to this podcast, there are a number of episodes that we've recorded in the past that I invite you to go check out. You can go to universalaccounting.com and in the navigation, find the podcast section where we've actually listed the highlights. You can see in the navigation highlights, go there, you'll find actually playlists that we've compiled of various episodes that are addressing specific things that you may be dealing with right now today. Some could be marketing, sales-oriented, mental health, perhaps it's tech stacks, maybe it's staff training, just a variety of topics that many of you have actually expressed interest in or that we've addressed over the years. And in those years, compiled now some of the highlights that you can go back and binge listen to. And I encourage you to do that. In addition, with Universal Accounting Center, as it relates to training your staff, helping you build the premier accounting firm. If you'd like to know more about our programs, the various courses and trainings that we have, whether it be bookkeeping, accounting, CFO, and advisory training, definitely reach out to Universal Accounting Center and you can learn more about the programs that we have available. You can go to universalaccounting.com or you can actually call us at 801-265-3777. Now, as it relates to the show, I do want to encourage you, if you have interest in these types of things, definitely check out Universal Accounting School and join us for GrowCon. GrowCon is an annual conference that we do every year in May. It is a conference for owners of bookkeeping and accounting and tax businesses to come and hear from the experts, visit with your peers, make connections, collaborate with one another to better service your clients, and also at the same time seem to see the team here, those individuals from Universal Accounting Center that are committed to your success so that you can be in business for yourself, but not by yourself with Universal Accounting. So all those things being said, always remember this. If it's about accounting, it is universal. Be careful, have a safe day, and enjoy yourselves. Perfect. Nolan, that was awesome.
Thank you for having me. I had a pleasure being here. It was a great conversation.
Excellent conversation. So here's what I'm going to have you do. Go to that chat and I'm going to have you record that little promo piece.
Oh, yeah. Let me pull that up. For the we discuss part, how long do you want that? Like, you want a concise one, just a really short couple of things, or do you want like a more of a drawn out?
It's usually like 30 to 40 seconds. What you think might be long is honestly probably okay. It's not like you're going to go for 3 minutes. So.
Right. I promise I won't go for 3 minutes. Just anytime I'm ready.
Yep. When you're ready.
Okay. This is Nolan Bradbury. It was an absolutely thrilling and engaging conversation to record with Roger on an episode of Building the Premier Accounting Firm. We discussed today the intricacies of the relationship with your clients, how you need to view them, how you can meet them in the right spot, how you can engage with them to have a really meaningful relationship, one that grows, and I think the one that you really want to have with them in the first place. I invite you to listen and join us.
Perfect.